How you doing? How you doing? I just flew in from Sydney after presenting for 2 whole days solid there, speaking non-stop, jumped on a plane, and I'm up here. So I want to acknowledge you guys for staying here, staying this late, because I know it's late. I know you've had 2 days jam-packed full of stuff that's just like melting your brains, correct? Yes. Have you had some awesome speakers? Yes. Right? I know a lot of these guys, I know a lot of their information, and it's just brilliant. You're probably almost spoiled for choice, aren't you? Yeah. Right? But who here secretly really loves property? Yeah. Show me. Yep, property. I am going to show you some incredible things around property. Let me just ask, because some of you have actually heard me speak before, haven't you? Who's actually heard me speak before? Quite a lot of you. Okay, great. All right. Well, I'd like to welcome you guys. I've got some really interesting things to talk about tonight as well. Things I haven't talked about before. Jamie's actually given you a little bit of a teaser about so far, hasn't he? Yes, he has. He wasn't supposed to give you so much, but I think he's just so excited about the opportunity. We've had people on the ground for literally 12 months researching, talking to people, finding out the best opportunities, taking all the risk out, and then wrapping it up into a system. So we've got an incredible thing to share with you guys today, right? Now, before I do that, I've got to do the standard thing first, and that is I've got to do a standard disclaimer. While every care has been taken to ensure the accuracy of the material presented, Property Director's employees, presenters, or any of its representatives will not bear any responsibility or liability for action taken by any person on the basis of the information contained in this seminar. The content is for information purposes only. It is recommended that no person make an investment decision until such time as their individual needs, desires, risk profile have been assessed by a qualified professional. Right? Standard thing, I'm here to give you lots and lots of information. I'm going to expect that you take lots and lots of notes because you don't know what piece of information I'm going to give you that may trigger you to a new idea, a new strategy, and a new outcome. Does that make sense? Let me hear you say yes? Yes. All right, so take lots of notes. But I want to make it clear because I know exactly what's involved in giving financial advice. I'm not here to give you specific advice. I don't know you well enough. I haven't spent half a day analysing your situation to make recommendations. Does that make sense? Say yes? Yes. All right, brilliant. All right, a little bit about my background. Some of you have seen this. Basically, you can tell from my accent I'm not from here, right? Yes. Sweet as, bro. Give you some LMP. No, the Kiwis got that. All right. No, I'm actually Hungarian. Can you tell? See, I'm always hungry. Always hungry for information, actually, as well as Scotch and lots of food. All right. But you see, here's the thing. I come from a non-English speaking, working class background, right? The reason I'm telling you that is I probably had the worst set of belief structures about money embedded into me that you could possibly imagine. Number 1, non-English speaking. Number 2, non-educated. Number 3, subsistence farmers. Number 4, are we up to 4? Roman Catholic. Number 5, coming from a communist background. Can you possibly imagine any worse combination of how money is evil and people with money are bad and it's all, everyone's socialist, communist sort of thing? I had to actually work really hard at changing those belief structures. And I acknowledge you guys for being here because working on yourself is literally one of the hardest things you could ever do. It's a never-ending journey, but the rewards are incredible. Does that make sense? All right. So what I wanted to tell you about was that a little bit about my story, just a short snippet, is that I was taught to get a good education, to study really hard, then get a good job, work really hard, and then everything to be sweet as. Yeah, the gold watch, thank you. But is that what really happens in life, yes or no? No, it doesn't. And in fact, the GFC clearly proved the fact that it doesn't give you exactly what you want. In fact, there are people that are working incredibly hard, and whatever happened in their life, they lost their money, they lost their job, whatever happened. Does that make sense? All right? I looked at my parents. They worked incredibly hard, and I thought, you know what? I'm going to make my money work hard. I'm going to make my brain work hard. I'd rather not make my body work hard. Who thinks just swapping time for money is not the best way of doing things? All right? I've actually taught for lots and lots of different groups for the last 15 years all over the planet. I actually started my life as an IT instructor. Before that, I actually trained as a high school science teacher. So I've actually worked for the New South Wales Department of Education. That was actually one of my first jobs, working for them. I've actually got a teaching degree. I love teaching. But I've taught in areas of science, I've taught in areas of IT, I've taught in areas of personal development, I've taught in areas of business, property and finance. So I teach in a whole range of different things. But one of the things I love the most is property. Do you want to know why? The reason I love property so much is this very simple reason. Where's my flip chart? Most Australians, would you agree, invest in three main asset categories. Number one is shares. Number two is business. Number three is property. Now, I used to work at a company called Rothschilds. Anyone heard of Rothschilds? It's a merchant bank. So I set up and manage some of the largest networks for merchant banks, and I work closely with business units to develop the platforms they needed. I had to understand their business to make it work for them, right? It took me a long time to get there, right? Starting off working at Kmart. As you can imagine, it's a long journey to get there. But what I found was that some of these people, no matter how incredibly academically smart they were and savvy, they sometimes, even with their systems and knowledge, they still lost money. To me, I realised that I didn't have a good enough system around shares to give me exactly what I wanted, and also the emotional roller coaster didn't suit me. Does that make sense? Yes? Yeah. All right, business. I knew a lot of people who were actually in business, and I learnt this the hard way from being as a bank manager. No matter how hard you work, no matter how hard you try in business, doesn't always work. In fact, 95% of businesses go bust in the first 5 years. So I just thought to myself, that is not a game for me. And then I looked at property. And the thing I loved about property the most is my parents bought a property in an outer suburb of Sydney that at the time was dairy farms and orchards. No one lived there, very few people lived there, but they bought this house for $42,000 in 1976. Today that house, they built a freeway out there, that's actually a tollway, beg your pardon, it's worth about $650K in 2010. It's a suburb called Carlingford. They've made, well, my mother passed away early this year, but they made $600,000 passively. All their goal was to get a roof over their family's head, work hard, put food on the table. Who understands that? Right? This is more money than they could have ever have saved, and literally what anyone else could literally save. Would you agree with that? And they weren't experts, but all they did was they bought a house that they could afford and looked after it. Who thinks that's a model or a formula that they could do as well? Well, I asked myself this question. Could I do that model not just once, but twice, 3 times, 4 times? And that's what led me down the path of property. And what we're going to be showing you today is some amazing different ways of doing property, because all of you actually have some beliefs about how property is done. I'm going to show you some different ways. All right? And what I'd like you to do is real quick, I want everyone just to, because I know it's getting late, everyone real quick, just stand. Everyone stand, up, 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 up. Everyone stand, cross your arms, quick, cross your arms, cross your arms, cross your arms. All right? Cross your arms. Look across. Has everyone got their arms crossed? Yes? Yes. Yes? Come on, let me hear. Yes? Yes. All right. Look down. Which arm is on top? Right. Yell it out. Right. Well, some people have got left, some people have got right. Which is the correct arm? So hang on. What you're telling me, there's more than one way to achieve your outcome. Is that what you're telling me? Quick, uncross your arms. Flap your fingers around like they're butterflies, recross them the other way. Quick, don't think about it, do it. Some of you can't. Some of you are struggling, right? Here's my point. Look around. Is your arm still crossed? Yes. Is everyone else's arms crossed? Yes? Yes. All right. Because they're crossed, have you still achieved the outcome? Yes. But you've done it a different way. You've done it a new way. It feels different. It feels uncomfortable. But does it achieve exactly the same result? Yes or yes? Yes. If you did it this new way 100 times tonight for homework, because remember I'm a science teacher, right? If you did it for homework, if I then asked you tomorrow, if I saw you on the street and said, quick, cross your arms, do you think you might suddenly do it the new normal way? Yes or no? Yes. For some of you, the answer is yes. Some of you are quick learners. Some of you have some long-held beliefs or habits that are very difficult to break. Who understands I'm not talking about property at the moment? I'm talking about anything else in life. Great, grab a seat, grab a seat. Give yourself a clap, well done. All right, my point is this. The way you've learned how to do property may not be the best way. It may not even be the only way. We've all been taught this concept of get a property, negative gearing. Who's heard that? Build a portfolio, negative gearing. You work yourself to the bone trying to pay for the property and desperately hang on to it. Would you agree? Yes or no? Yes. What if there was a way to capture growth in property without having a loan? Who thinks that'd be pretty impressive? All right. What about if there was a way to control some assets with actually very little money? Who'd be interested in that? Who'd be interested in buying properties at wholesale? Anyone interested in that? What about if there were ways to actually not have any rates, body corporate, maintenance, land tax? Who'd be interested in a way of doing property like that? Does that sound like a different way than what you've all been taught? Yes or no? All right. So what I'm going to be showing you is some of that. Now, before I get onto that, I'm going to actually just give you a little bit of what Jamie probably shared with you, because I'm going to be talking, and this is going to be a bit of a marathon for you guys, because I'm going to be talking for about 2.5 hours. All right. I've got so much to share. I can talk for 5 days. Has anyone been to one of my advanced courses? Anyone? 3 days or more? I can talk for 5 days on property because it's so exciting. It is so exciting, all the different things you can do. All right. But tonight they've only given me 2.5 hours. I'm going to cover later on tonight, how do you retire? Listen to this. How do you retire on a 55K? Remember, medium salary in Australia is just over 50K. So how do you retire on at least the average Australian salary, indexed to grow for the rest of your life, buying the approximately one Australian property, the equivalent of one Australian property? That's right. But it's not just buy a US property. Could you make a severe mistake buying the wrong US property? In fact, you could. There are some properties, and I'll tell you more about this when we get to the US, that are just a huge problem. I'll get to that later tonight. But what if you could do this? What if you could even get, and remember, the US banking system is not working. Many US people can't get loans at all. But what if we could get you a loan at up to 75%? So for the same money you'd buy one, through our system, you could buy 4 and get potentially 4 lots of uplift. Who likes the sound of that? Anyone? What about this? What if you get some of those loans? Some of you may even qualify for loans as low as 3.99%. And do you know in the US you can fix loans for up to 30 years? How good would that be for your cash flows? And the lack of stress, the feeling of calm, knowing all your cash flows for the next 30 years. Who likes the sound of that? Anyone? What about this? What about if you could buy in your self-managed fund, self-managed super fund, a property with as little as $25,000? Now that's impossible. In Australia, you're paying 30 to 50K often in stamp duty, let alone buying a whole property, let alone buying it through your super fund. Geared, listen to this, geared in your super fund. Because you know if you buy a property the wrong way in your super fund geared, right, the wrong loan, you've broken it. You're not complying with the SIS Act, right? And you're in big trouble. We have been able, because of Jamie and the size of our group, to negotiate with them, and they've created a loan just for our people that is compliant with the SIS Act. The SIS Act is for the Superannuation Act, okay? So imagine that. Imagine being able to buy, if you have just as little as 25K in your super fund. If it's not self-managed yet, that can change. If you have 25K in your super fund, you could be a property owner in your super fund. Who likes the sound of that? All right. What about for every property you buy, each year you pocket between $7,000 to $10,000? Does that sound pretty good? Instead of in Australia, normally it's negatively cash flowed. You're losing a whole lot of money per property each year. Imagine pocketing 7 to 10K per property. Each and every one, thank you very much, banked into the bank, right? But what about this? What if we could get you anywhere from 10 to 15 to 20 or even up to 25% yield? And what if, would you be happy with that, by the way? If you get 10 to 20% yield, who'd be happy with that? Who'd be overjoyed at that from day one? But what if I could then get that guaranteed for you to be paid every month for the next 10 years? Who'd be just ecstatic about that? 10 years rent guaranteed. Not your problem anymore. If they don't have a tenant, they get the wrong tenant, not your problem. They're paying you. When has a property manager ever done that for you here in Australia? When? Never is the answer. But what about this? What if you got a property that was earning you a 20% return? That property pays for itself in 5 years. But what if after 10 years you could hand it back, you've made back the entire cost of the property twice, you could just hand it back, get all your money back? Who likes the sound of that? How much belief and confidence would they have to be able to even offer anything like that? When has any property developer, real estate agent or vendor offered you a 100% buyback guarantee? You see, this isn't US property. This is a US property system. Say the word system. Right? You could go onto eBay and you could buy a property tomorrow in the US. The problem is that in the US, things work differently. Your whole paradigms have to change. I'm going to talk more about that later on. But where you buy, there may be no property managers available. Some of them aren't even regulated. Some of them won't even go and look at your property because of all the gang warfare in that area. Okay? So you have to be incredibly careful. This is why we have spent 12 months making sure that we actually build the right system to protect our members the most. Who understands that? Who thinks that's valuable? All right? So I'm going to be covering that probably closer to about 9:30 tonight, and I'm going to go into detail about that then. And the way we're going to describe it and show you what's possible, it will blow your socks off. Literally blow your socks off. All right? But first, I want to ask you a question. Why are you here? What are you looking for? Why are you here? Just tell me. What are you looking for? You want cash flow? Yep. What else? You want to make some money? Yes. Right? You want to do it passively? You want to do it safely? In fact, let me ask you this question. Isn't the reason that you want to invest to have a better quality of life, but rather than put all your money into whatever it's going to be, you keep much of it in the bank? Why? Because of safety. Would you agree with that? If something was going to work great, you'd put all your money in there, agreed? But you keep some in the bank. Why? Because of safety. What makes banks safe is because they underwrite their whole balance sheet with property. Do you understand that, right? Their asset is your mortgage against your property. What if there was a way to use exactly the same asset base but make 60 to 100% per annum returns? What if there was a system around that? Same security system the banks use, but the way you could do it is 60 to 100%. Who thinks that sounds pretty interesting? All right? You see, it's about doing things differently. It's not doing things this way, it's about doing things this way. Right? So, I want you to be honest with yourself. How many of you are really frustrated, upset, and you haven't got the results that you thought you'd have by this stage in your life? Is anyone honestly in that position? Who here has had some problems in life and has learned from them, and from that knowledge wish they could do things differently? Anyone in that position? All right? What I'm about to show you gives you some opportunities. It lets you literally recapture time because of the way we've structured this deal. All right? But firstly, I just want to describe the Australian deal to you. Who'd like to save over $100,000 in holding costs on a property? Does that sound pretty good? Because if 100K doesn't go out of your pocket and stays in your pocket, that's like making an extra 100K worth of profit. Who understands that? Is that a good thing, yes or no? Right? What about this? What about buying properties in a high growth area and not having to make a single progress payment for 10 to 12 years? Does that sound pretty good? Right? Come on, yes or no? This is my favorite. What if you end up buying at below 50% or more below hard cost? Not 50% below retail, but below hard cost. When was the last time you bought anything at 50 or more percent below hard cost? Right? And this isn't something weird like a syndicate or a unit trust. It's just you pick a property, it's got a number, that's the one you're going to buy. It's really that simple. All right? It's an option contract, which gives you full control, and your name only goes on the title if you choose it to be, if you choose to settle. Otherwise, you on-sell it. And in the jurisdiction I'm going to talk to you about, in that jurisdiction, you don't even have to pay double stamp duty if you on-sell your option. So if you're not paying stamp duty, does that money stay in your pocket, yes or no? Yep. Is that a good thing? Yep. Of course it is. All right? But what about this? What if you could make 60 to 100% per annum return on investment? Listen to this word, consistently. When was the last time you made 60 to 100% per annum consistently for 10 years? Or 10 to 12 years? Who thinks that would revolutionize their whole wealth system? Anyone believe that? What? The rest of you didn't have your hand up. Are you earning more than 60 to 100% per annum consistently? Yes or no? No. All right? Okay. What about this? Who wants to make 10 to 20K fast cash on the way in after a couple of weeks? Who'd be interested in that? All right? What about this? If you could hang on to the property long term and make $250,000, would you like to do that? $250,000 passively, just sitting there in the background working for you. Well, first of all, let me show you what context this is in. I'm going to give you the Australian economy and property market. Some of you may or may not know this. The IMF. The IMF, International Monetary Fund, gives Australia some of the highest marks in the world. The GFC barely gave us a glancing blow. All right? The world is looking at us. In fact, next weekend, there's about 50 people from Indonesia, Malaysia, Singapore flying in to Australia to actually look at some of these deals, because they believe, they know that Australia is actually not just financially stable, but it will be financially stable and prosperous for the next decade or so. And people throughout the world want a piece of that. They want some stability and strength. Who understands that? Very important thing. Another very important thing about the Australian market is this. Who's heard of Jones Lang LaSalle? Who's heard of Jones Lang LaSalle? International property consulting firm. Every 2 years they release this index. It's the Global Real Estate Transparency Index. It measures every real estate market in the world, and what it does is it compares them from a transparency point of view, such as the legalities, the jurisdiction, the separation of parliament to the judiciary. It talks about growth, finance system, all of these sorts of things. Guess which country came number one? Number one was Australia. Why? Because the world sees us as one of the strongest places in the world to invest, one of the strongest places in the world to look after your money, one of the strongest places in the world to make sure that people get what they're looking for, and that if they have any recourse, there's no problem going to the court system. Now, there's many different things driving the Australian property prices. Many different things, but there's two big white elephants in the room. How many? Two. Let's talk about one of those, which is the supply side. Excuse me, guys. All right. So on the supply side, this is what's going on in terms of market balance. Right? Can anyone see a clear trend? Below the zero line is when Australia was in surplus, when we had too many properties. That's where the US is. In the US, they are in way surplus. All right? We, on the other hand, guess what we're in? Way deficit. Right? We went from surplus into shortage or deficit about 98. Write that down, 1998. 97, 98 was roughly when we went into deficit. So when people say to you, oh, Australian property prices, the bubble is going to burst, well, if you look at any of the major fundamentals, that's a real problem to explain, because we have such a shortage of properties. According to the ANZ Bank, we are 250,000 houses short right now. According to the Housing Institute of Australia, within the next decade, we will be 500,000 houses short. For a population our size, that is unprecedented. It is also, listen to this very closely, a problem that cannot be fixed. Now, if you understand basic economic principles of supply and demand, if it's a problem that's only going to get worse, guess where property prices will go? Up or down? Up. Can you see that they're going up, not just sort of straight line, but they're going up almost logarithmically, sort of exponentially. And the situation's getting much worse. In fact, this is an article from a Victorian newspaper called the Herald Sun. And basically, if you want to become an automatic millionaire, look at this. You buy one house in Melbourne, and I'm not flogging Melbourne in particular, but it's got some of the strongest economic fundamentals in Australia. A Melbourne house, an average Melbourne house, according to BIS Shrapnel, which is one of the leading economic forecasters in Australia, it will be worth about $1 million. You just hang on to it. Based on the last 43 years worth of growth, it'll just become $1 million. So if you want to become a millionaire passively, just buy one in Melbourne, sit back and wait. But what I'd like to show you more specifically is this. Look at the shape of the curve here. Would you agree that for the first part, it's not a very shallow angle, but later on it gets very steep? Does that make sense? When does it move from being fairly shallow to very steep? Happens about here. What happens about there? Can you see it's fairly shallow there, but very steep there? What happens right about there is about 1997, 98. What happened in 97, 98? Who remembers? We went from surplus into deficit. When there's not enough of something and too many people want it, what is likely to happen to the price? Goes up. We can't fix this situation on the supply side. It'll actually only get worse. What do you think will happen to the property prices in Melbourne over the next 5, 10 years? What do you think? Go up a little bit or a lot? A lot. So will some people make a lot of money? Yes or no? Yes. All right? That could be you. That's not my choice, it's your choice. But in fact, is it just Melbourne? Look at this graph. Have a look and you tell me which decade, starting which year, was the greatest for all cities. In fact, so much growth that it was more than the last 4 decades preceding it added together. Which decade, starting which year? Sydney, Melbourne, Brisbane, Adelaide, Perth, the major cities in Australia. It started after 96. What year is the year after 96? 97, 98. Right? So it didn't just happen in Melbourne. Where did it happen? It happened everywhere in Australia. We went from what? Surplus to what? Deficit. And was that reflected in the prices? Yes or no? In fact, look at this. Brisbane, 1996, $132,000 median price of a property here in Brizzy. How many properties should you have bought? Should you have not gone out for a whole year, every weekend, stayed at home, eating 2-minute noodles, saved up 1 extra deposit, bought 1 extra property? Would you be in a very different position today? Yes or yes? Yes. Of course you would. What if you could go back to 1996? Who'd want to do that? Who'd want that opportunity? Well, let me tell you, I'm going to show you a way to do that. I'm going to show you a way to capture 10 to 12 years worth of growth as if it was today. And that's what we can do with this incredible structure of the deal that we've actually put together. And I'll show you that in a moment. Now, I said there's 2 elephants in the room, didn't I? Right? Supply side is one of the big problems we're facing. That by itself will drive up property prices no end. Does that make sense? All right? But number 2 is the other elephant in the room is demand side. Demand side is this. At the moment, we have got a migration surge coming into the country. We have had one of the biggest migration surges since World War II. All right? Our long-term trend for migration coming into the country is roughly 140 to 160,000 net immigrants. That's what it normally is, long-term trend. According to this data from BIS Shrapnel, back in 2008, it was 215,000. That was 2008. 2009, what's the number there for 2009? 285,000. In 2010, guess what the number is? Targeted towards. 300,000 is where it's moving towards. Now, I want you to think, if we have roughly double the amount of population coming into the country, is that going to place some pressure on housing stock? Yes or no? Right? And a lot of the people coming into the country, because the government's being very selective, which is great, a lot of these people are educated, they have money, and many of them are what are called employer-sponsored. Because is our economy growing strongly? Very strongly. In fact, every migrant that comes actually generates more than one job in terms of all the things they buy, right? So if we have a lot of people coming in, does that actually stoke the fires of our economy? You better believe it does. And those people that come in actually fill some of the roles that we just can't fill. We've got these huge mining jobs that are happening, not just in Queensland, but in Western Australia as well, and will soon be in South Australia in Olympic Dam. We just don't have enough people. It's ripping the young apprentices out of the blue-collar jobs, and they're getting double to triple or quadruple their starting salary as an apprentice in the mining industry, right? So that's what's going on in the mining industry. People are just cleaning up, right? So we need a lot more workers. So if you understand that not only have we got a lack of supply, but we have huge cashed up demand, turn to the person next to you and tell them what you think is going to happen to property prices over the next 10 years. Just turn to them. Tell them what you think. Just tell them. Tell them what you think. All right? Ladies and gentlemen, that's just two. That's just two of the drivers. I track about 30 of the drivers. Each one of those drivers will push property prices up. I believe we're in for one of the largest, strongest, and longest surges in property growth we're ever going to have. In fact, it may actually be the last one because the baby boomers are actually downsizing. So this current boom we're about to have, or we're actually already started, I believe will be maybe one of the last, but it'll be one of the strongest. All right? Now, what about land? Do all properties sit on land, yes or no? All right? Now, I love land. All right? I didn't used to love land because I had some preconceived ideas. I thought you only did land like this until I learned you could do land like this. Who follows? All right? So, this is from Housing Institute of Australia data. And HIA, just so that you know, is the peak economic body in Australia for residential properties, just so that you know. All right? According to their data, in 1973, I could have bought for $20,000 odd one house to sit on a block of land or two blocks of land. Does that make sense? In 1973. Now, 33 years later, the house that sits on the land would have gone up and be worth from $18,900 to $215,000. It would have gone up 11 times. But the block of land, each of them would have gone from $9,100 to $263,000. The land went up nearly 29 times. And it's not just constrained into Sydney. Look at Melbourne. The land went up 19 times, the houses 14 times. Brisbane, the houses went up only 12 times, the land went up 20 times. And these sorts of numbers are repeated over and over again. I then went to value a general equivalent data in Victoria. This is from the Department of Sustainability and Environment. This is government data. This is from Wyndham Shire, the fastest growing local government area authority in Victoria. So Wyndham Shire. The sample size is big enough. Look at the number of houses and blocks of land. I did some numbers. I found that houses grew over the last 4 years 33%, but I found that land grew 55%. So land grew 66% faster than the houses. If it was your money, what would you prefer to do? Well, you'd like to make more money, correct? Right? So the land is actually showing you that it's going to do that, but there's a problem with land. I'll cover that in a moment. I'm sure all of you are about to say, but hang on, Stephen, there's a problem. Now, this is from RP Data. RP Data, just so that you know, has the license to interrogate every government database in Australia for land property title information, right? So all land transfers, so 99% of all land transfers go through the government databases because you pay stamp duty. Who follows that? Who understands? Right? RP Data can extract all that data. So it's probably the most thorough data in Australia. But it is not as timely. It's usually lagging by about 3 months. But that's okay because I want to see the trend. Look at this. The red line is the price of land from 2002 March to March 2010. Can anyone see there's a clear trend there? What has the land price, median price of land, been doing across Australia for a long period of time? It's been trending up. Why does land trend up? Simply because we actually don't have enough of it. But people say it's a big country. Yeah, but where the heck do we all live? Around the edges, near the water. So where we want to live, there's not as much land. Who understands that? Right? So there's a lot of competition for very limited land in those areas. Now, I want just someone to help me with this. What's your name, sir? Andrew, will you verify for everyone, because it's a bit hard to see, but at the bottom of that chart, it says 10 least expensive regional markets. Is that correct? Yes. All right. And the equal 10th last one is Goulburn, Victoria, 100,000. Is that correct? Yep. All right. Can you guys all see that on this side? 10 least expensive regional markets. Number 10 equal is Goulburn, Victoria, 100,000, which means that the median price of a block of land in the Goulburn Valley region of Victoria is $100,000. Who understands that? I'd like you to remember that because we're going to refer back to that shortly. All right? By the way, is that expensive or cheap for a block of land? It's pretty inexpensive, actually. All right? That's why it's equal 10th cheapest in Australia. All right. Now, I want to show you some stuff about land which will really get you thinking, get you excited. This is from the Fin Review, and I'm just drilling into a part of it. According to the Fin Review, there's an area in Victoria called Point Cook, right? It's where I actually live. I live in Point Cook. It's about 25 k's, 22 k's from the city to the west, down a freeway, right? This area, a hectare of land there in 2004, I know it's a bit late to do some numbers, but you'll get pretty excited with the numbers. I'm sure you'll like it. 2004, how much was a hectare there? 345K, right? In 2010, they resold 24 hectares, so a bulk lot. They sold that bulk lot for 1.25 million. So if we're comparing apples with apples and it wasn't a bulk lot, it wouldn't be 1.24, it'd be about 1.4 million. Does that make sense? They got a wholesale discount. So at 1.4 million, you tell me, how much did the land go up in the space of 6 years? Yeah, about 400% in 6 years. So how much is that per annum? Anyone got a calculator? It's about 67%. When was the last time you earned 67% per annum for 6 years? Who'd be happy with that? Now guess what? Gets better. That's what's called a return on asset value. When people buy this land, that's return on asset. What is it? Return on asset. Do people in Australia buy properties with 100% cash, yes or no? They get a loan, don't they? Loans on land is 30% your money, 70% the bank. So in fact, your return on investment, the money you would have put in, you would have only put in a third of the money. What would your return have been if you only put in a third of it? Well, 3 times that. You would have made about 200% return on investment for 10 years solid, for 6 years solid. Who thinks that sounds very, very exciting? Now, let me tell you, some of you have already in the back of your minds made up an excuse. Well, I can't do that. It's not for me because it's a hectare. I could never have afforded a hectare. Let's be honest. Who's already made an excuse? Who's had that little voice talking away in their back of their heads? All right? Great. Thank you for your honesty. So let's go to the next example, Williams Landing. Williams Landing's across the freeway. I used to live there before, Point Cook. Lovely spot. But let's talk about a single block of land. Is that within your conscious space, yes or no? Is that more easily relatable, yes or no? Could you relate yourself buying a single block of land, yes or no? Yes. Of course you could, all right? And a block of land in Williams Landing last year, so 2009, was how much? 198. Now, by the way, is that an expensive block of land? Is 198,000 a lot for a block of land? It's not really. Compared to Australia, Victoria's got very cheap land. All right? 198. It says that in 2010, that block went up to, let me tell you, any guesses? That block went to 275. It went up 30, I think it's 34%, it's 38%. Is that return on asset or return on investment? That's return on asset. The people who bought in there, most of them had only put down a 10% deposit and were waiting for titles to issue. Some of them didn't even have a loan. They only put 10% down. What do you think their return on investment was? Yeah, 380%. When was the last time you passively made 380% on something as boring as a block of dirt? Because it's not buying property, it's doing property under the right what? System. Right? Now, these people, when they bought, they probably, because they bought off the plan, did not even have a loan. They did not even have to get a what? A mortgage. They didn't have to pay body corporate. They didn't have to pay rates. They didn't have to pay maintenance. They didn't have to pay land tax. And most importantly, they didn't have to pay the bank. Who thinks that's pretty amazing? Doing it that way. And by the way, how complicated is buying a block of dirt and waiting? Who thinks that you have to switch on a computer or read newspapers every day to be able to do that? Just buy a block of dirt and wait. Who thinks they could psychologically handle that level of stress? All right? Could you do that more than once, yes or no? You bet you could, all right? Now, but some of you are saying, yeah, but what's going to happen after a year? Yeah, you've got to get a loan, and you've got to get a 70% loan from a bank. But what if there was a way to keep doing that for year after year after year and not have to get a loan. Who'd be interested in that? All right, I'm going to show you that shortly. Right, a couple more articles. We'll move past those. Record price for Melbourne land. By the way, Oliver Hume is a real estate agent down in Melbourne, and they are one of the largest real estate agents in Victoria who look after land, right? And so they have got tons and tons of data. Now, listen to this. In Point Cook, they started selling blocks of land 10 years ago at $70,000. Now it's $200,000. In fact, it's actually higher than that. But what that means is that the land there has been moving up and up and up. So in some stages, they're up to stage 76. So that means that they started selling a development, and each year there was a couple of stages sold, next year a couple of stages, next year a couple of stages. What if you had bought in the first stage? What do you think their price would be in the same development by stage 76? Do you think they keep putting the prices up? That's exactly what they do. Who likes the concept of getting your block, letting someone else do all the heavy lifting and drag your price up and up and up and up? Who likes the sound of that? Right? Because this is why land is actually a system. If you understand this, you can make incredible returns that do not exist in the property market. Land is a very unique vehicle because it can be done an incredibly different way. So here's my question to you. How do you take advantage of the current situation that's going on with the lack of properties, the huge demand, and also the major lack of land, but do land in such an incredible way, or properties in an incredible way? I don't mind what you want to do. My only point is do it in an incredible way. Who thinks that would be a smart philosophy to follow? And what I mean by that is how do you do it smarter, faster, easy, with less money and often less risk than the average person? All right, well, at the moment, there's actually 3 ways that you can get into the property market. Number 1 is trial and error. This is the way I started. I actually came up to Queensland with my partner at the time, and she and I saw our parents work incredibly hard, not have time for their families, and we thought, let's buy some properties. Sydney was too expensive. We came up to Brisbane and the Gold Coast. We actually made a huge mistake. We actually way overpaid on 2 properties. We overpaid by $40,000 because we didn't understand this concept called 2-tier marketing. There was a price for locals, people from Brizzy and the Gold Coast, and those people south of the border. All right? The cockroaches, yeah. All right? So, Mexican, whatever you want to call them, right? So we got slammed. Now, 40K, is that a lot of money to lose? What about 40K 15 years ago? Ouch. All right? So I learnt my lesson, and that was that I needed smarter people on my team. I thought I knew what I was doing. In fact, obviously, I'd made a huge mistake. I needed the right people, I needed the right systems, and I needed better education. I had to lose the ego because the ego was actually costing me. It actually just cost me 40 grand. Who's following? Who understands? All right? So I invested a lot of money in myself to actually learn from all the best people. In fact, some of the same mentors that Jamie used were like, who's heard of Tony Robbins? Yeah. Right? Brian Tracy, Dr. Fred Gross, Dr. John DeMartini, Philippa Bond here, many different people. Chris Howard. I've learned from a whole lot of different people because you pick what works for you from all of those people and you then integrate it and implement it. Number 2, the other way is this. You can get a property advocate, sometimes called a buyer's agent, to work on your behalf. They charge for a typical property worth $500,000. They will charge roughly between 1% to about 3%. So that's about $15,000. So 1%, they usually charge 10K flat plus 1% success fee, right? The others just charge a flat 3%. Who would pay someone 15 grand to buy them a property? Who'd want to do that? Well, what if they could save you 20, 30, 50K? Now who'd want to make a commercial decision? Pay them 15 if they could save you. As long as you could genuinely measure, independently verify they were making you money. Would you pay the 15K? Yes or yes? Of course you would. That would be smart. Good use of your time as long as you could verify and you were absolutely certain of it. The third way is what we do. And basically, Jamie and all of us sat around and said, we're all property investors. We've all bought lots of properties. What would we want in a system that we would pay for, that we would want, that would actually help us? And that's what 21st Century Property Direct is all about. Who here at the moment is already a 21st Century Property Direct member, a PD member? 1 person? Two people? Two persons. All right, two people. All right. Well, welcome to you guys. For the rest of you, let me tell you what we do to look after our members to get them great results. All right. First thing we do is explain to you why we have this. Would you agree that there are people who, when you start off in property, it's scary. The numbers are big and it's very scary. Would it be important to have your hand held through that process? Yes or no? All right. There are some people who bought maybe 2 or 3 properties, and you know what? They realise that they don't have eyes in every market, and they understand that having someone looking at different opportunities for them in every city of Australia, including places like Auckland and including like places overseas, for house and land, townhouses and apartments, could be very valuable. Who understands that? Plus, we've got some people who say, you know what? We've got some clients that have over 100 properties. And they say, listen, just one idea or one strategy from you guys, if we integrate that, implement it across our portfolio, we can already get a tremendous result. So we look after people from every different background because that's what this service was designed to do. All right? We have people on our team who are real estate agents, property developers, finance specialists, interior designers, architects, quantity surveyors, accountants. We have a huge team. Who is on your team at the moment? Who helps you make extraordinarily good decisions that are commercial decisions? Who's on your team right now? And what's that costing you not having the right people on your team in terms of time and money? I'll give you an example. Put your hand up if you've ever bought a property. Put them right up, please. Right up. Look around. Leave your hand up if you are actually able to negotiate for your property purchase to not pay any stamp duty. One person. Well done, sir. Nikki as well. All right. Yeah, she's access to our PD service. All right. If you weren't able to do that, how come? Because some of our members were able to do that. Some of them got other upgrades or inclusions or extras that the retail public never saw or never got. If you had your stamp duty paid for, how much would that be worth to you? Per property. How much would it be worth to you? 20K, 30K? What would it be worth to you? Make a commercial decision. So this is some of the things that we do for our members. Our membership is broken up into 3 components, 3 pillars that we know give people results. How many? 3. The first that we actually look at is education. We know it starts with education. Do you want to know why? If you're not educated the right way about property, you have what's called fear. And Peter Blaine talked about fear. If you have fear, do you take massive action, yes or no? Most people, no. What overcomes fear is massive education. We educate our clients for between 3 to 7 years. I've just come from running a 2-day event in Sydney and people loved it. And we had people there who'd been to the event several times already. And you know what they said? Every time we come to an event, we learn some different stuff. We're always around other property investors who are actually on the same road, and some of them actually a bit further ahead of us, and who are getting different results to us, and we love talking to them. But we really love the fact that we learn some new things around property. We learn some new things around tax and finance and structures and the legal system. So they love having those 4 different elements they learn and get updated with all the time. We do things in terms of education, in terms of live events like this. We also do a lot of home studies. Why? Because people are starting off at different levels. We want to get them all to the same level at their own speed in the comfort of their homes. Does that make sense? Right? Then what we also do is you do webinars for people who can't come to all the live events, as well as we do newsletters and a whole bunch of different things like that. Because we know that people have got busy lives and they all learn at different speeds and different ways. So we cater for that. All right? Number 2, we do a property search service. We go out and we find great property deals. We start with a great property, but what we do is we turn it into a great deal. And I'll show you that in a moment. And then number 3, we do wholesale land. And to me, that's the most incredible part of what I'm about to show you. But the first bit is education. So let me just tell you kind of, if you want results, this is our investors pyramid. This is the way you've got to be programming yourself to think and act. It all starts with knowledge. If you don't have knowledge, you'll make a mistake, you'll be scared, you won't do it again, right? This is why knowledge and getting it up front is the cheapest way of getting to a result. So you pay for your education one way or the other. Smart people realize this. You either accept it and pay for it up front, you can do it faster and easier, or you learn that in the end you made a horrendous mistake that has cost you money and time. Who here has made mistakes in the past? Right? Have they cost you dearly? Yes or no? Of course. And you could have learnt something real quick, real easy, that could have stopped you making that expensive mistake. We understand that knowledge is critical. You get the knowledge right, then that leads you on to creating your own plan. Put your hand up if you currently have a written down, structured wealth plan. Put your hand up if you've got one of those. All right, Lou's got a hand up, 3 or 4 people. Well done to you guys for putting it in writing, because it's going to give you a 10 times greater chance of making it into a reality than people who actually don't have it written down. And that's just some facts. The more you actually have a clear focus and you write it down, the more you'll attract it specifically and it'll come to you. All right? So this is what we help people through our system. Right? For 3 to 5 years, we educate you, we help build a plan, we then look after getting your finance. The finance, who knows exactly how much they can borrow right now? Maximum borrowing capacity right now. If you haven't done it in the last day or so, you don't know, because did they change the interest rates? Yes or no? That will affect your DSR. That will affect your borrowing capacity, right? So you have to understand, and particularly if you're with CBA, who put it up beyond the RBA 0.25%, it's definitely affected your maximum borrowing capacity, all right? So this is what we do for our members all the time. We analyze who's going to give them the most money, the easiest, fastest way, so they can make informed decisions as to what deal is the most appropriate for them. Then we talk to them about asset and tax, or one of our team does. We help structure them the right way to minimize their risk, to maximize their borrowing capacity. Then it's about due diligence. Not just about the property, but the area and then the specific property. Because don't you want the best area for capital growth coupled with the best property that'll give you the best growth? Yes or no? And then on top of that, and this is where most people don't know or don't understand this, a great property is good, but a great property structured poorly will only give you an okay result. An average property structured incredibly well will give you an unbelievable result that will far surpass a good property structured poorly. This is what people do not understand. In fact, I want to just quickly, I've got a few moments, I want to show you something that clearly illustrates this. Are you okay with this? You want to see how you can make not just 10 or 20%, but 100 or 1,000% return in properties? Who wants to see how to do that? It's about structuring. So let me show you some of the things that we do with people and show them. All right? And it's understanding this return on asset, return on investment paradigm correctly. If you have an average property that's, let's say, $500,000, growing at 10% per annum for 12 months in a normal market, you bought it for 500, it's now worth how much? 550K, correct? You've made 50K. Come on, is that correct? Yes or no? All right. Now, the average people, average buyers are taught that they actually need to own property. And they're taught to do it one of 2 ways. The first way is pay 100% cash. If I paid 100% cash, and let me tell you, in some parts of the world, you have to. If you are buying in the US, for most people who don't have our system, you are buying 100% cash. Some of the US people who live there can't even get a loan because their FICO score has been hammered. FICO is their credit score equivalent, okay? So they can't even get a loan. So some parts of the US, some parts in Eastern Europe, some parts in Africa, and some parts in Asia, the only way you buy properties is with 100% cash. Who understands that? Come on, who understands? 100% cash, right? So if I paid 500K cash for this property and it goes to 550, I make 50K. My return on asset is 10%. Who follows that? What is my return on investment? I put in 100% cash. I made 50K. How much is my return on investment? It's 10% as well. I put in 500K, which is 100% cash. I make 50K. My return on investment is 10K. Show me you understand. All right? But what if I did this? What if I went to an Australian bank and said, give me 80% P&I, and I put in 20% cash? I've now put in 1/5 of the money. Who's following so far? But have I made exactly the same amount of growth? Yes or no? Come on, yes or no? So I put in 20%, which is $100,000. The bank lends me $400,000. We're all following, yes? So I put in 100K of my money and I make 50K. What's my return on investment now? 50%. Who thinks 50% is a whole lot better than 10%? Right? But hey, I'm only getting started. Repeat after me. There's always another level. Repeat after me. Would you like to see it? Yes. All right. Average people, average buyers are taught to own. Smart, successful investors are not taught to own. They're taught to control. Sorry? Oh. Can we flip to flip charts? Oh, thank you. Thank you. All right. And you may want to write this down because average people throughout history have been taught to own. Smart, successful investors have all been taught you don't need to own anything. You just need to control it. Repeat after me. Control. Control. That's what you need to do. Watch this. Control versus ownership is a huge paradigm shift. I'll give you a simple example that many of you are familiar with. Put your hand up if you have an interest-only loan. Put them up. All right? Would you agree with those people with your hands up that for the same loan amount, your per month repayment is actually lower than a P&I loan? Is that true? You say yes or no? Yep. All right. So in fact, you're telling me that you're getting exactly the same growth, yes or no, with less cash flow, yes or no? So who thinks getting the same result with less money is a smarter way of doing things? Right? But that's a starting point. So that's 80% interest only plus your 20% cash. What's the next level? Who here has ever done an off-the-plan purchase? Anyone ever done off the plan? Your name, sir? Dave. Dave, while you were buying it off the plan, did you have to pay rates? No. Did you have to pay land tax? No. Did you have to pay maintenance? No. Did you have to pay body corporate? Did you have to pay any money to the bank as a loan repayment? No. So Dave, listen to this, Dave got the same growth as maybe someone across the road who actually had a mortgage, but he had no money coming out of his pocket. Who thinks Dave's a rock star? I do. All right? So he did off-plan. And in fact, Dave, normally when you do off-plan, how much is the deposit you normally put down? Oh, okay, well, that's even more advanced. So you are a rock star, aren't you? You put down $1,000. Normally you put down 10%. So if you put down 10% of this value, right? How much is 10% of this? How much? 50. You put down 50 and you made how much? 50. What's my return on investment now? It's 100% return on investment. Who's following so far? Right? Is there another level? Well, in life, there's what? There's always what? Another level. Who wants to see the next level up? Yep. Go on. The next level up. You could do, there's actually a sub-level within this because you could do something with off the plan. And imagine this. Imagine you could rent your deposit. Instead of coming up with 10%, which is 50K, what if instead of coming up with 50K, you only come up with $5,000? Who thinks coming up with $5,000 is easier than coming up with 50 grand? Anyone? All right. If you came up with just $5,000, you could have gotten not 100% return, but with $5,000, by renting your deposit, you could have gotten 1,000% return on investment. Who understands that? But is there another level? Yeah, there's another way to rent your deposit, right? Because there's different financial instruments, and you could have not for $5,000, but probably. Has anyone got a calculator? Times $50,000 by 1.6%. $800. That's $800, isn't it? Geez, my maths is good. $800. Oh, I can't work this out, but $800 to make 50 grand. Let's just say it was $1,000. $1,000 to make 50 grand is 5,000% return on investment. Is that right? So, has everybody noticed that the transaction, the asset, has not changed? Has anyone noticed that? What has changed is the structure. All that you've done is you've increased the level of skill and structure to get you an incredibly much better result. In fact, if I would have actually used as little as a few $1,000s, but I had 500K, could I have done a few more deals? Yes or no? Right? You see, this is why I said most people just focus on the property, but they do it this way. I could take an average property and I could get orders of magnitude better results with it, even if it was an average property, by structuring it the right way. Repeat after me. Structure is superior to property. It's absolutely superior. Have I just demonstrated to you just quickly what is possible? I've just given you an overview. I could spend a whole day explaining all the different ways to structure it, but I wanted to give you a taste. And some of you go, well, how do I rent my deposit? When you come to our 2-day event, you'll all get a yellow form later on. You're all welcome. I'm all going to give you a ticket to our 2-day course. You can say thanks for that. Yeah! All right, you're all going to make sure you pick one of the forms up on the way out. It says 2-day advanced finance property course. Who's been to our advanced 2-day finance and property mastery course? Anyone? Yeah? Did you enjoy it? Conrad probably took that one. Did you enjoy it? Oh, we were both there. Okay, all right. And it's great because we've both got different experiences, different knowledge bases, but we also have a lot of different speakers there, and it's a way for you to actually learn a lot. Tickets to that are worth about $1,000 each. You're going to all get them for free. So it looks like this. You'll pick it up on the way out, hand it in tonight, just cross out where the credit card is and put in, Stephen said it's free. That'll do. They'll know what it means. All right. Now, back to the slideshow. So we understand that when you actually do your due diligence and then you structure right, and part of that structure is evident in the negotiation level, then you go to transaction, you can get extraordinarily better results. This is what we help our members do as a plan, as a system for 3, 5, and 7 years. It's a plan, it's a system to get them from where they are to where they want to go to, using property as the vehicle. And I'm not telling you which is the right property. We've got properties all over Australia and New Zealand and internationally. I'm not going to say to you which location or what type. It could be blocks of land. It could be US properties. I don't know. But this is what we sit down, work out where the heck you are. Because is it important to know where you're starting from? Because otherwise, how do you know you're going backwards or forwards, really? Do some people spend a lot of energy in life treading water, being busy, but not actually knowing that they're actually going backwards or forwards? Is that a fair statement, yes or no? Right? Many people would like to think they're moving forward, but in some cases they're not. All right? So, we give you a whole lot of home studies. The home studies, I'll just quickly run through some of them. The first one is the Fast Track Home Study, Cash Flow Positive Property. This is all about renovation. Who likes renovation? Who likes renos? It's a great way to make money, particularly if you're creative or you've got some of the skills. Fantastic. You've got to be organised. You've got to have the right skill set. If you don't, you shouldn't do this. The only thing I would suggest is you find someone doing a reno and volunteer your time and watch what happens and then decide whether it's for you or not. I've seen too many people lose out by getting stuck halfway, running out of money, then having to sell the property half finished. And let me tell you, you'll make a loss, a big loss. All right? What this does is it goes through all the steps required, but in fact, even if you're not doing a reno, the information on this is brilliant. It's from a gentleman called Warren Bourget, and he actually is retired, living in Europe now, and he's a multimillionaire from doing property renos, all right? So that information is brilliant, and he did it mostly around the St Kilda area in Melbourne. Who's heard of St Kilda? It's a great area, just did reno after reno after reno. Built a system around doing renos and building wealth. The second one we give you is from a gentleman called Warren Black. Now, who's heard Warren Black speak? Warren is a CPA, Warren is also a solicitor, and Warren worked for 10 years for the Australian Tax Office in the audit department. So do you think he knows his stuff? You bet, right? And he teaches you why you should own nothing and control everything. It's a paradigm shift. We are not taught that way. We're sold a story by the governments, by schools, by well-meaning friends and family, but it's not the best way. It's one way, but it's not the best way. Does that make sense? That's the difference. It's one way, not the best way, right? He teaches you about different structures, including how to buy properties in self-managed super funds, all of these sorts of things. That course by itself was worth about $500. The other one was worth $2,000, right? We also give you this one. This is the home study of the 2-day event. It's brilliant, but the information keeps changing. This was shot earlier this year in Brisbane. You watch it a couple of times, you get up to speed, and then you come to our live events. And we have people coming to ones interstate as well. Why? Because if they're looking to buy for properties interstate, they often find it really useful to rub shoulders with other investors who are already on that path, investing in that city or that state. Who thinks that would be valuable? Be able to have lunch or coffee or just chat to people and network with them and say, show me around what you do. Give me the lay of the land, all right? Because they would love to return the favour or expect the return of the favour when they come up here as well. So we literally have people who just fly in from sometimes other countries as well. The one I just ran in Sydney, we had a couple of guys there from Perth. We had some guys who drove up from Temora. We had people from Canberra, all over the place. All right, it was great, and they enjoyed it. When I've run other ones in Perth, we had Darwin people fly in as well, which I thought was a bit far, but they could have gone to Brisbane, but just the dates worked better for them. All right, so that's the education side. Live events, home studies, webinars, books, newsletters for 3 to 7 years, depending on how much help you want, being around those sorts of people. The second thing we do, and this is the thing that I think is probably one of the best services we provide, is access to properties. We're not pushing one particular development, so we're not a developer. What we do is we work with developers all over Australia, New Zealand, in house and land, townhouses and apartments. So what we do is our philosophy is we will educate you, we will show you where we get all of our data, we'll show you what our findings are in terms of what areas are growing the best and why, and you can decide where in Australia or overseas you want to invest. All right? And we'll deal with many different developers in those areas. You can pick which developer and or which development. So we're not biased, we're not saying this or this one, you get to pick. We know some people want to spread out their investments all over Australia to minimise land tax. We know some people want to buy properties in other areas because they want to go live there. We know some people want to actually have properties in other areas just so they can travel there and get the tax office to pay for the trip. I'm not saying that's the reason you should ever invest, but some people, that's the way they think. We're not here to tell you how to think in that way. You decide. We want to give you a smorgasbord. You decide what you want to eat. Does that make sense? Okay? So let me show you a little bit about that. So the first thing we do is we make sure our members get first access to properties in this system. They get ground floor access, all right? Normally when a developer builds something, the developer keeps the best ones and their family buys the next best ones. The financier buys the next and their friends and family buy the next. So even if you were the front of the queue when they release it, some of the best ones are gone. Or they're back on the market but at a higher price. They're actually being flipped and resold. Who's actually seen that happen? All right? So we have a very simple deal. We say to the developer, you have to provide genuine, independently verifiable and measurable value to our members. And our members get first pick, not you. Right? And our developers like working with us because what it does is they know that our members are highly educated. They know how to critique a development, they know how to measure things. And if it stacks up, they can make a decision and they stick with it. Do you think developers want people like that, yes or no? Of course they do, because a developer has a certain time frame they have to sell a certain number in. It's called pre-sales. And if they don't sell it in a certain time frame, the quote they got to build the building lapses. And guess, what do you think quotes go, up or down? Up, very fast. So if it takes them too long, literally overnight, their profitability can be halved. And that's why they don't want to do that. That's why they need to work fast and they need to work with people that are smart who understand property. This is why we spend so much time educating our members so they actually are clear on what they want. We don't want to tell them what they need. We want to educate them so they are clear in what they want. And we will find different projects that meet those needs. Right? Now, some of the other things we do is we have a very detailed 52 points of criteria. When you come to our 2-day course, guess what we're going to teach you? We're going to teach you our 52 points of criteria. And whenever you look at any of our properties, we will give you a research document that covers our 52 points of criteria for every single property that we do. Who thinks that would be incredibly valuable? Right? Because that's the only way you can make an informed decision. It's not about shoving a glossy brochure in your face like most agents do and say, you better buy it, they're really good. It's about showing you, here are the demographics, here's the distance to the schools, this is how many parks are in the area, this is what the LGA has grown at, this is what this area grows at, this is the demographics, this is what it values up at, this is what we can get loans at, this is an independent letter saying what it should rent at. Do you think that would be valuable, yes or no? Right? But most people aren't even educated to understand to look for those things. Right? But we have high standards. Why? Because I'm a member, Jamie's a member, our whole team are members. this membership is not just for you. We are members. We set it up because we wanted a better system to acquire properties at better prices and better deals. Imagine this. Imagine Jamie walks into a room. Do you think Jamie could negotiate and receive a better property deal than you? Yes or no? Yes. Who would love to stand behind him and say, I'll have one of those too, thanks? Because that's what this membership is all about. All right? And the more people we have in this membership, literally the more leverage we have. The more people, guess what? The bigger deals we can take out, the better deals we get for all of us. That's what this membership's about, full stop. And in fact, part of this, there's a whole lot of things that we look for, all right? Part of this, we even negotiate something very specific for our members. We negotiate that our members get, listen to this, 5 working days cooling off. Because how long do great opportunities last for in the market? How long? 2 seconds, right? But we have this fear of if we leap in, we could make a mistake. So what happens is we're kind of like a deer in headlights. We don't know what to do. We don't want to miss out on a great deal, but we don't want to jump in case we make a mistake. Who honestly understands that, right? So how do we resolve that? Well, first of all, we educate people massively up front. Then we make sure they get a whole due diligence document. Then we give them plenty of time. Most jurisdictions in Australia give you 3 working days cooling off. We get you 5, which is actually a week. You understand that? That is double to nearly triple what you would get anywhere else. No agent in their right mind would want to give you longer term and educate you and give you all the documentation. You understand why, right? But we do the opposite. Why? Real simple. Because we want you to double check and triple check and quadruple check. It's the right deal for you at the right time. Why? Because you're going to come back again and again. And you're going to tell all your friends and family, and our membership size will get bigger, and we'll be able to do bigger deals. Who gets that? It's the whole philosophy behind this. We all can win together. It's not a big deal. We can all win together by using this system. Let me show you one of the house deals that we've got. This is in Point Cook. Actually, sorry, the ones I'm going to show you, these are all gone, but I want to show you the sorts of things that we do. Point Cook is it's actually 20 k's as the bird flies. It's about 25 k's driving, right? Takes you about 20 minutes to get into the city. The city you can see in the distance. In the foreground is a big thing, which is a marina. And in the middle is roughly where Point Cook is. Now, let me ask you this. Sanctuary Lakes is a Greg Norman designed golf course. Do you think property prices there are high? Sure are. This marina is at Wyndham Harbour. It will be the largest marina in the Southern Hemisphere. 1,000 boats, 30 super yachts, and a whole lot of restaurants, bars, cafes, etc. Point Cook is in the middle of them. Do you think that this $500 million marina will generate a whole lifestyle area precinct around it? Yes or no? Of course it will, right? And do you think Sanctuary Lakes, let me tell you, some of the blocks of land there on their own island, there's $1 million just for the block of land. What do you think that will do to Point Cook? Go up a lot, all right? So, Point Cook is a very nice area, but you know what? We're not just dealing with one developer there. These are all the different land estates there. We can put you in touch with any one of them. They're all slightly different. I don't care. You decide which one suits your needs, because we've already got better deals than retail for our members in each of these estates. We don't care which one you want to deal with, all right? For instance, I live in Alamanda. It's not listed there. Alamanda won the Victorian Award for the best integrated resort lifestyle development. It then took it out for Australia. The reason I live there is a really simple reason. It's a bit geeky, but I wanted fibre optic to my front door. Because I run webinars, I need high-speed, reliable data into Asia and the US, because I run a lot of webinars. Does that make sense? That was my need, all right? There is also a space for a huge school there. They have an outdoor park with, all the exercises you do around the park. They also have a gym, sauna, spa, swimming pool, and a cafe. I usually make it to the cafe, not to the gym. All right? But it's all integrated in the same lifestyle development. It's a really nice area. And they built a mountain, literally with a pirate ship on top, with long slides for kids. So the little kids spend all day, their parents at the barbecue, talking to their friends, having a picnic. The kids literally bolt up and down this mountain and then slide down, and they do this all day. So by the time they go home, the kids are exhausted and the parents are super happy. So this is one of the reasons why it won these awards, because they thought about all these things, okay? So What about townhouses? Well, some people prefer townhouses. We've got one in a place called Newport Keys. It's in Adelaide. If you understand what's going to happen to Adelaide, has already happened in Perth. When all the mining money flew into Perth, property prices there jumped by 40%, right? Someone decided, you know what, we're going to jump the gun here and create the sort of lifestyle development, low maintenance areas that people who work in the mining industry will want to live in. Now, BHP will open up the biggest mine in the world in a place called Olympic Dam. Olympic Dam is so big that it will have a lifespan of approximately 100 years conservatively. It has the richest, most easily accessible reserves of uranium they found anywhere in the world. But not just that, but gold, palladium, nickel, copper, all of these other things as well. And it's about 4 or 5 hours drive north of Adelaide. What do you think that is likely to do to Adelaide's wealth? Take a wild guess. It will skyrocket and underwrite it, not just for the next decade, but literally for decades to come. So, do you think all these BHP execs want their families to live on the mine site when they can drive, 3, 4 or 5 hours? And by the way, they'll upgrade the roads. That's no issue, right? But unlike Karratha, Dampier, that you have to fly in, fly out, they'll be able to drive here. So they'll want somewhere good to live. Who understands so far? And they'll be on really good money and the company will be paying, so they don't care, right? So this is what they're building in Adelaide, this development. That's what it currently looks like. These are nice, large, 3-bedroom townhouses, high spec, low maintenance, well equipped. You'd love to live there, right? Yes or no? Well, they've been selling these for about $680,000, $620,000, $680,000, around that range. The developer here has got a long-term plan. They want to get on to the next stage. Now, they've got a couple left in the last stage, but they want to start selling the new stage. At guess what price? Higher. So they actually said, well, we can't advertise a lower price to get rid of the last couple. So what we'll do is we'll do what's called an off-market transaction. Repeat after me. Off-market transaction. What is it? When you can find these, this is where you'll clean up. Because in an off-market transaction, they've already made their profit target for the stage or that part of the development. They just need to actually sell a couple so they don't have to worry about marketing or sales. They can just focus on the next stage. Does that make sense? So these were selling for up to $680K. For our members, because we're not allowed to advertise this price. We're not allowed to go in the papers and advertise this. So for our members, I think there's maybe one left, I don't know, but this is what our members got. 150K below what other people had been paying for the last couple of months. When was the last time you made 150K on the way in by signing a contract? 150K. How long would it take you to save up that much? These are the sorts of things we bring to our members all the time, right? What would you pay me to get you a deal that made you 150K on the way in? What would you pay me? 1%. Is that all I'm worth to you? Is that very commercial? If someone could make you 150K, what would you pay them? Seriously, what would you pay them? 20%? Maybe I'd do it for you, maybe. We've got some others. This one's at Kalanga. We've got other, we do them all over Australia. So this is a Queensland one. Each one of these in this development was uniquely designed. None of them had the same floor plan. Do people like things that look kind of similar but not the same? Yeah, of course they do. All right. What about apartments? Who's heard of a suburb called Coorparoo? Anyone heard of Coorparoo? Is it a good suburb? Yeah, it's very close to the city. These sold to our members very, very quickly. We did a whole due diligence background on them at Coorparoo. They were apartments. You can see how close Coorparoo is to the city. We got all the stats from RP Data, so independent data sources. We got together all the information they needed into a nice folder. They could then research that and understand it. They're all gone. None of them are available. I just want to give you ideas of the type of stock we're finding for our members, right? But what I want to show you is this. For every single one of our properties, we put together as part of the due diligence an independent a market appraisal of rental from a local agent. Do you think that would be important to know? Secondly, we put together an independent valuation by a top-tier valuer that's on every bank panel, like a CB Richard Ellis. or a Heron Todd White or a Charter Keck Kramer. So no dodgy backroom vals, but valuations done by top-tier valuers on every bank panel that you can then use for lending purposes. Who thinks that would be pretty valuable, right? Because that is an independent source of what it's probably worth. And then a quantity surveyor's report for depreciation. So we put all of this in every one of our due diligence kits. Like that alone will save you like $1,000. Do you understand that? And every one of our members gets this. This is the value we provide to our members because this is what we would expect if we were buying it ourselves. All right? Here's another example of an apartment. Now, this is unique because we didn't put together a due diligence kit for this, right? Because we were already working with the developer and the developer went bust. So all the people who put money in got all their money back, but then the bank just said, because they hadn't gone to contract, they didn't have to sell it at auction, they said, we'll do it as an off-market transaction. We said, our members will take all of them, right? And it's at Aspendale, it's right near Mordialloc, it's right on the beach. This is the view. Is that a nice view, yes or no? Right? Now, this is what it looked like inside, very high spec. Let me just give you a perspective. Normally, and as a banker, I know this, most people pay retail. Right? When you pay retail, who's heard that there's a thing called a bank valuation? Who understands that? Does a bank valuation come in above retail, at retail, or below retail? All of you said below. You're actually right. It comes in below. So that your bank valuation is below. Well, how much below retail? So 99% of all Australians, when they buy property, it is at retail. If you've bought at bank val, you're in the 1%, you've done really well. How much below retail is bank val normally? 15? Any other numbers? 10? 20? It's usually anywhere from 3 to 20%. It's most commonly between about 5 to 10%. So if you've bought within 5 to 10% of a bank val, most people consider you've done reasonably well, given that most people understand bank vals are conservative. If you asked Heron Todd White for a market val, it would be higher than a bank val. Do you all understand the difference? Okay? So if you bought between 5 or 10%, but above a bank val at retail, most people would consider you've done pretty well okay. But if you got to buy at bank val, you're in the 1%. You've done really well. Who understands? But what if you bought below bank val? You're literally in the 0.1% of the population. This is why we didn't have a chance to do a bank val, why we didn't do a whole due diligence kit on this. This was high spec, and I mean really high spec. This was built with owner-occupiers in mind. Beautiful dark wood, not laminate veneer floorboards, but solid floorboards with invisible nails, right? So there was no nail holes, nothing, right? And that takes a lot of work doing it that way. Beautiful design, beautiful layout, super high spec. Look at the prices. The bank vals were those prices in the blue. Look at what our members purchased them at. And let me tell you, we put it out, they just went, even though we had no due diligence folder. Do you understand why? Because these people in Melbourne knew the area, they knew the prices, and they knew that this was a really good price. When you can buy 40 to 50K below bank val in an area that you know, that's on the water, that can never be replaced, are you going to be pretty happy, yes or no? Yep. Right? We had some clients just the other day, they just bought in Mount Waverley. Listen to this, $100,000 below bank val. Not just below retail, below bank val. Would you be happy with us doing that work for you, yes or no? Yep. All right? Because that literally means at the stroke of a pen, you've bought it wholesale. You have bought it wholesale. You've just banked that. It's now yours. Who understands? All right? There's a third part of what we do. Who thinks the first part's pretty good? Who thinks the second part's outstanding? Third part will knock your socks off. You ready? Come on, are you ready? Yes. All right. Third part. I covered some of this earlier. Just to remind you, what if you could buy properties with saving 100K throughout in holding costs? What if you could buy in a high growth area with no progress payments, 10 to 12 years? What if you could buy at over 50% below cost? What if you did it through an option that allowed you to have full control and on-sell? What if you could make 60 to 100% return per annum consistently? What if you could make 20K fast cash on the way in or 250K long term? Would that be an amazing structure, an amazing asset, yes or no? All right? Well, this is where it is. Moira Park Green City. It's exclusively for our Property Direct members and their guests. It's located in a place called Shepparton, Victoria. Now, Shepparton, many of you don't know the story behind Shepparton, but just like a lot of the regional cities in Queensland, it has a very, very strong track record. I'm going to show you a bit about that in a moment, but up the top you can see Shepparton. To its left you can see Mooroopna, which is its sister city. It's separated by a river and a little bit of a state forest. Down below it you can see Kialla West. Down below it's Kialla West. It's on the way to Melbourne. All right? The yellow part here is stage 1, the red part is stage 2. Stage 1 is between 1 to 15 years. Stage 2 is 10 to 25 years. So, do you think this is a long-term plan, yes or no? If you got in early, what do you think they're going to be doing for the next 25 years with price growth in these stage 1 and stage 2s? What do you think? Might go up? Yeah, they're going to be consistently putting this up for the next 25 years. Who thinks that sounds like a good plan for someone to do all the heavy lifting as long as you can get in early? Who thinks that sounds pretty good so far? But what if you get in early and not have to have a loan? No loan, nobody corporate, no rates, no land tax, no maintenance. And you could experience most of that heavy lifting. Well, how would we do that? Well, the first part is this yellow part here, looks like this in detail. These drawings were done by a company called SMEC. They're the developer. Who's heard of SMEC Urban? Anyone? All right. Most of you haven't. Let me tell you what SMEC stands for. Snowy Mountains Engineering Corporation. Guess what they built in the late 50s? The Snowy Mountains Hydroelectric Authority. They built the dam and the turbines, the whole thing. Right, so have they been around a long time? Have they got the street credibility, yes or no? They've built some of the biggest projects in Australia and overseas. The government used to consult them out for fees to other governments and corporates to do work. They have a division called SMEC Urban. Guess what the urban department does? Urban planning. Guess who they work for? A list of who's who. Divine, Multiplex, Delphin. The list goes on and on and on. They don't just work for corporations. They also work for government authorities, state governments, federal governments, and also councils in terms of urban planning and project management. They also work for semi-government authorities such as water boards and places like that as well. So do you think they're pretty good at what they do? Yes or no? All right? So they're the developer, right? They have a reputation and they've won lots and lots of awards for the things that they do. All right? So this area is one of the fastest growing areas in Australia. Just the first stage will accommodate well over 3,000 people, right? They will have major retail precincts, small office, home office, resort-style accommodations, all of these sorts of things there. It's located in the Goulburn Valley. And listen to this, the Goulburn Valley, just so that you understand this, is located north of Melbourne, right? In the Goulburn Valley is the Greater Shepparton Local Government Area Authority. And within that is the city of Shepparton, Mooroopna, Kialla West, etc. Just so that you understand the hierarchy there, all right? Now, this area, this city is the number 4 city in Victoria. So it goes Melbourne, then Geelong, then Ballarat, then Bendigo, then Ballarat, then Shep. So it's the 4th biggest regional city after Melbourne. Does that make sense? All right? Now, what's important, that it has a greater retail spend there than not just its biggest city, Ballarat or Bendigo, but both of them combined. Now, do you think that's an important aspect for a regional economy to have a lot of money flowing around the economic wheels? Yes or no? All right? In fact, I don't have time to show. I've got a video from one of the local council members, and he said that anyone who wants a job in Shep has always had a job. They don't understand the word recession in Shep, and you'll see why, because it's considered the fruit bowl of Australia, right? Has anyone ever heard SPC Ardmona or IXL? Guess where all that stuff comes from? Shepparton, all right? In fact, it's one of the wealthiest regions in Australia, and it has more BMs and Mercedes per head than anywhere else in Australia. It's 180 kilometres north of Melbourne, so it's 1.5 to 2 hours drive, depending how fast you drive in the traffic. 150,000 people live in the region. It's got a population of 60,000. It's going to expand to over 81,000 by 2030. Now, that's according to council's own documents. Shep's the 4th largest Victorian regional city. All right, it has a $4 billion per annum turnover industry. 45% of all the stone fruit in Australia comes from this area. 16% of all the apples, 90% actually of all the pears, it says 85, it's 90%. 90% of all the kiwi fruit, 90% of all the tomato processing, 90% of all deciduous canned fruit processing, right? $1.2 billion per annum dairy industry, which accounts for 25% of all of Australia's dairy. Bet you didn't know that. 25% of all dairy in Australia comes out of this Goulburn Valley. That's incredible, isn't it? Right? They have one of the largest trucking and transport hubs in Australia. So it has actually got a very diverse economic base. You've got all the agriculture, you've got the machinery and the milling to actually create the canning and all of these works, and then you've got all the transport to get that and all the milk out of here. Does that make sense? So it's got a very strong, diverse economic base. It's actually one of the largest regional concentration of food processing industries and workforce in all of Australia. It has had, listen to this, even through the GFC, it has had 19 consecutive quarters of positive economic growth. It's not just one of the strongest in Victoria, it's one of the strongest in Australia. Who thinks that that's an important part of the story of finding a good area that's going to build wealth for you in property? Anyone believe that? Having a strong economy? I believe so. All right. Prices in the area for the last decade have grown by 11%. Melbourne's actually grown slower than that. 11% per annum is what it's been growing. It's house prices there, median blocks of land about $100,000. They expect over the next 25 years, according to council's current documentation, that they'll need about 9,100 houses. That's about 400 houses a year. The councillor came and spoke when we launched this, and he said, yeah, those numbers are a bit old. We're growing much faster than we expected. We don't need 400 houses a year, we need 900 houses a year as a minimum. Does that bode well for the economic story of this place, yes or no? It's incredibly well. All right, there's a whole lot of housing trends that they need, but look at this. Melbourne is growing, it's the fastest growing city in Australia. It's growing at 1.2%. Shepparton currently is growing at 2.4%. The council is doing a whole lot of projects to amplify the growth. Anyone who wants a job there has a job. They expect their population growth will go to 3.1%. That's one of the fastest growing areas literally in all of Australia. Do people when they move somewhere spend money? Yes or no? Is that good for a local economy? Yes or no? All right. Now, it's also, they have a preferred southern growth corridor, and this is in that area. There's only one real growth corridor, and it's south. All right. And that's where the Kialla West, the new shopping centre, commercial offices, all of that is. And that's the one that goes to Melbourne. This is also a very highly favoured tree change location because people aren't doing as much sea change anymore. Why? Because of inundation and global rising of water levels. All right. Let me tell you what's unique about this. It's meant for cradle to grave type existence. So they have diversity of houses. The council realises they need diversity of housing in this area. This project will deliver it. That's why council drove down and presented at our event. They insisted on it. Councils don't normally do that, right? So when we had our first launch to our members who'd been members and waited for 6 to 9 months for this project, right? We had 100 of them show up. We had the council and the developer answered all their questions. We sold more that week to locals than any other place around Australia. What does that tell you? If local Victorians, many of who know this area, they live in there, they drive through there, and they know Victorian law. Victoria has some of the strongest laws around property because they have what's called a vendor statement that's often thicker than the contract, right? If Victorians bought more than anyone else, what does that tell you? Like, really, what does it tell you? All right? Now, Moira Park Living, it's a series of master planned linked communities. It has neighbourhood parks, sporting areas. It's got a green city credentials. This is one of the main reasons why the council is supporting it, because of its green credentials. What that means is the federal government and state governments are giving grants to local regional governments if they have sustainable projects on the go, because sustainable's all the buzz, correct? So this is why they want to get all this extra funding, because they need a big project to show that they're going down the right path. Plus they need this big project. Why? Because they need houses for all these people to keep fueling their economy, right? Which is more ratepayers and a bigger economy. Now, this is what's incredible. In this development, normally when you buy a block of land anywhere, and now that I've said the word Shepparton, you could get online, you could go out to Shep yourself and buy a block of land anywhere in Shep, right? But you will find that blocks of land in Shep, depending on where they're at, some are in the north, where all the housing commission is. You don't want to be in the north, right? Some are actually way to the east, and that's too far away, right? That's Kyalla and further on. You don't want to be there either, right? Kyalla West is where actually there's a lot of expansion going on. They're moving where the planes land, the aircraft field, they're moving it to the other side. They're going to redevelop that as well. The council have already predetermined that this is the preferred southern growth corridor. This is where they want all residential and all the amenities to go. So the council's actually determined this already. So this fulfills a lot of their requirements. So if you bought in that area, you would buy a block of land right now, 90 to 125K right now. You get online, you can check it yourself. But if you bought it online right now, when would you settle that block? 60, 90 days? Then you'd have to get a what? A mortgage. You'd have to pay a mortgage for how long? To capture the growth for the next 10 or 12 years? You'd have to pay mortgage every month. You'd have to pay rates. You'd have to pay land tax. You'd have to pay maintenance. Who understands? That would add up to, so if you wanted this block of land and you bought the land, if I can just go to flip charts, please. If you bought this block of land and this block of land cost you $100,000, after 10 to 12 years, it will probably go to $300,000, because listen to this closely. Houses double in 7 to 10 years. Land triples in 7 to 10 years. Have I shown you some numbers that back that up? Yes or no? All right? So if this doubles, what's your net amount you've made? 200K, agreed? But if you've had $100,000 of holding costs, is that going to hurt your profit? Yes or no? All right? So who likes to make double the amount of profit? Anyone? Right? Well, can I go back to my PowerPoint, please? All right? If you did it the normal way, cross your arms the normal way, if you did it that way, you would have bought the land, got a loan, paid rates, mortgage, you would have lost over $100,000. You do it our way, you don't have to do any of that. The extra 100 grand stays in your pocket. Happy about that? Sounds pretty good? No one has done this. This is the most incredible way of doing land that you'll ever see. And we won't be able to do this again, because do you know how rare it is to be able to negotiate with someone doing such a big development that hasn't been taken over by a multiplex or a Delphin or someone? These are the farmers. They don't care. They'll keep farming for the next 5, 10, 20 years until they're ready to give up those blocks. They don't care. They were going to do it anyway. Who understands that? Right? They would rather get a bigger payoff, because time, they're happy to wait. So we've done an incredible deal, a deal that we'll probably never be able to repeat, simply because at the moment they are what's called asset-rich, cash flow poor. Bless you. You need huge amounts of money as a contribution to give to council to get an area rezoned. Council wants this. They've already decided this is the area will be rezoned. In fact, on either side of it are current developments that have already been built of exactly the same type, and even Kyalla West is also the same. So there's no question. The only thing is you have to pay money to get it rezoned. Why? Because councils have a legal obligation that when they rezone something, they have to have money set aside for amenities, such as libraries, childcare centres, to fix roads, to provide sporting fields. Who understands? So as much as they want it and they need it, they can't rubber stamp it until they get the money transferred to them. So this is why that we've done a deal with them to say that we will be able to help them. Now, if you bought one block of land, would you get a discount? No. But if you bought 10, would you get a discount? Yes. What about 100? You get a really good discount. What we did was we didn't buy 100. We actually underwrote taking out 1,800. Jamie underwrote 1,800. Now, that means that they have certainty as they will get a certain amount of money in a certain period of time. Why is that important? Because they have to pay SMEC a lot of money. They have to pay council a lot of money. And what has been happening is they've tried to sell one or two here, but the problem is the costs have escalated so fast that they couldn't sell any fast enough to catch up. Who understands? So that gave us a huge opportunity to put massive leverage on them to say, we want this, we want this, we want this, we want this. We negotiated stuff you could never do, ever. Do you think you could ever negotiate 10 to 12 years settlement? Who here has ever seen a 10 to 12 year settlement? Think about this. You get to capture the property for at least one, maybe even two property cycles. That's impossible. That doesn't ever happen. But we've done some other things, some really crazy stuff as part of this. We've even put into the contract things such as even if the titles get issued early, right? Because the developer said to us, oh, it should be at least 10 years, we think 12 years, right? We spoke to SMEC and we actually said to them specifically, what if everything goes exactly to plan? Well, then it'll be a minimum 7 to 8 years. So we turned around and said, for our members in the contracts, even if titles have issued, you cannot ask our members to settle any earlier than 10 years. It's in the contract for our members. Retail people won't get that. Our members will. Who thinks that's pretty valuable? Because that means literally some retail people will have bought and they'll have a covenant that says you've got to build within 12 months, right? So by the time you settle, there could actually be blocks have sold at retail price, not at wholesale, and they built houses on them. What will that do to the value of your block, do you think? Put it up a lot. Who can see that's a way to really manufacture growth, right? You could never do this by yourself, right? Now, what if you wanted to sell them? Well, in 7 to 8 years, they will actually have a retail plan, right? They'll do all the marketing, they'll do all the things. You can just say to that retail agent to say, hey, I've got a few blocks, sell mine at the same time. They'll say no problem, all right? And you can just sell and make your profit, right? I won't have time to, there's even ways I can sit down with you, explain to even get a free block. Now that's some crazy stuff that we can actually show you because it's all about the structure of the deal, all right? But this is what a really good thing that we've done. For our members, we've even negotiated this. Normally, when you buy a block of land in any development in Australia, there is a covenant that says you must build within 12 to 18 months. Who knows about that, right? It's in there. They do not want empty, pocketed developments. Developers will always put this in. And in some cases, they're really nasty. There's one at Caroline Springs in Melbourne. They start with a D. I don't want to say who it is. But if you haven't built within 12 months, they will forcibly buy the block back from you at 95% of what you paid, irrespective of market growth. That's how serious they want you to build. Well, do you know why they want you to build? Because if you go bankrupt and a bank moves in to sell your block of land as mortgagee in possession, they'll just take whatever they can get, agreed? That could devalue the whole development. They will not allow that to happen. But what we've negotiated just for our members is something unique. That one line that says you must build within 12 to 18 months for our members' contracts has been removed. What have we done? We've had it what? Removed. Which means, listen to this, you never, ever have to build. Now, does anyone know the consequences of that? What does that mean? If you never have to build and everyone else around you has built, nice houses, owner-occupied, looked after, who lives in an area where an empty block of land is actually worth more than a house? Happens all the time. What that's called is called hypergrowth. Because people see a well-established area, good neighbourhood, they go, I'd love to live here, but I want my house. I don't want someone else's house. I want to design my house with my fixtures, my colour schemes. Because it's cheaper than buying an existing house, tearing it down, or remodelling it. Who understands that? So houses in well-established areas that are empty blocks of land, you get hypergrowth. This allows you to have hypergrowth. Do you understand the significance of this clause? Who do you think we did this for? Yeah, we did it for ourselves, and you guys get to tag along. All right, Jamie wants this, I want this, Conrad wants this. We want the best opportunity to long-term make the most amount of money. You get exactly the same contracts. Who thinks that's a really good reason to be a member? All right, that one thing alone will make you literally tens of thousands of dollars, right? And there's even a way, who'd love a way you can hang on to this block, even after you settle it 10 to 12 years, who'd love to be able to hang on to it with no money out of your pocket for 25 years? Who'd like to know how to do that? Well, it's called capitalisation of interest. I don't have time to explain it now, but literally the amount of loan amount that you owe at 8%, because the block is worth so much, you just add it each year. So you can afford to hang on to it. I worked out for about 13 and a half years before any money has to come out of your pocket. What do you think the block has done in 13 and a half years? It's doubled or tripled. Does that make sense? And then you could just keep capitalising. And by that stage, listen to this, the block sizes across the state have probably shrunk And you can probably subdivide the block, sell off half, get the other one for free. That's how you get the free block. Okay? So what we've done, oops, sorry, could you just pass me that? What we've done is we've actually set up a whole system. So it's not a block of land. You understand it's not just a block of land. It's a system around a block of land that we've put together. Right? It's price controlled, so you know for the next 25 years they're going to keep raising prices up and up and up. They're going to be the project manager. We've even negotiated a 3-day cooling off because in options you normally never get a cooling off. We've negotiated 3 working days. Why? Because we want our members further protected. All right? You can sell before settlement. You can sell after settlement. You can build a house and then sell it. You can build a house and keep the house. Whatever combination you want to do, there's no restrictions on you. All right? You can use whatever agent you want to sell it. You don't have to use us or anyone. You can do it yourself. Doesn't matter. It's up to you. We're here to help you as much as you want to be helped. So if you want to build a house, one of the things we'll do is we'll go on behalf of all of our members, including me, to builders in the area and say, don't give us a one-off price. Give us a 500 off price or a 2,000 off price. Do you think we'll get a better deal for house building for our members? Yes or no? Who'd want to have a part of that? All right? This is what we do. All right. Look, here's an example. In that area, you could buy a block on average for 100K right now. Right? Through our membership, you could probably buy it at about 80K. If that's all the deal was and you were able to save 10 to 20% right now, would you be pretty happy with that? If you could make 10 or 20K on the way in that you could independently check and measure, would that make our membership worthwhile? Yes or no? All right? That's per block, by the way. Then the prices will keep incrementing up, and we think roughly at around 2014, that's when the rezoning will be done and dusted. The block should be worth between 135 and 150. Then it'll keep moving up and up and up until it gets finally towards 2022 when our members need to settle. Those blocks should be worth between 270 and 300. Now, how do you get into something like that? Well, you don't have to come up with a full 100K. You could start off with a very small amount, like 16.5K. Now, on a 100K block, 16.5K is not a lot of money. Would you agree? And here's the great thing. Rather than you having to come up with all of it at once, we've said to the developer, listen, we do not want to leave anyone behind. We want something that all of our members must and need to and should be able to take advantage of. So we got them to allow that 16.5 to be spread out over 90 days. So it's a little bit up front and the majority of it at the back end, 90 days later, which gives you time to save, sell some shares, refinance, revalue, whatever you need to do to get into that. So you actually start the transaction with $1,100. Is that an easy way to get into a property for $1,100? Yes or no? So we've done that specifically because our members just literally have trouble affording $500,000 properties where you've got to pump in 120 to 130K to get into the market. Is that fair enough? All right? Now, then, in about 10 to 12 years later, you'll have to come up with the balance. Where will you get the money for the balance, do you think? Starts with a B. Bank. If you go to a bank and say, I have an asset worth, let's say $300,000, I want to borrow $60,000. That's a 20% LVR. Let's say it's a 25% LVR. Do you think if you went to a bank and asked for a 25% LVR, they would give it to you? Yes or no? You could be bankrupt, not working. They'll give you a 25% LVR because that's safe for them. Non-recourse loans are at 50%. They'll give you a 25% loan. I can guarantee that as a banker. I've owned a Bank of Queensland franchise. I know what banks are allowed to lend on. I know credit policy. 25% is a lay-down misère. You know, the only problem you'll have is they'll say, is that all you want? That's your only problem you're likely to have, literally. All right? So how did I come up with that number? At 10% growth. What has this area been growing at? Who remembers? 11%. So I've said 10%. It's naturally been growing at 11%. But once they start doing developments, what will happen is you'll actually get artificial growth. As they release each stage, the value will keep going up. Who understands that? Show me you understand that and you're awake. Okay? Cool. All right. Listen to this. At 10% growth, which is below what it's been growing at, each block that you bought for 100K is now worth 313. Your net profit is 213 a block. But you didn't buy it at 100K, did you? You got a 20K discount, didn't you? So add 20K to 213. How much have you made? 233. Add to it the $100,000 you've saved in holding costs. How much have you made or saved? 313. Let me ask you a question. How many lots of 16,500 would you swap me for 300,000? How many? How many times did you do that transaction? Once, twice, 10 times, 100 times? How many times? But guess what? It gets better. Because the way we've structured it, and you've got to get your own tax advice on this, but that 16,500 normally as an option fee rolls over and forms part of the deposit. It's capital cost, not tax deductible. We've done it as a fee. So it doesn't roll over, but you buy the block of land for that amount less. So the total amount doesn't change. We've structured it differently. Have I said to you it's all about structure? Right? We've structured this in such a unique way, we had to get a QC opinion and say, yeah, you've got to do it this way. So that 16.5 for many people will be fully tax deductible. If it's fully tax deductible, you're in the top tax bracket, that could mean that literally you pay $9,000 and you get back the equivalent of 300,000. How many lots of $9,000 would you swap for 300,000? And look at this. If this block of land that's worth $100,000 grows at 11% per annum, you're making 11K. Agreed? How much does it cost you to get in? Maybe 16.5. But post-tax, it's probably about $9,000. If you've, for $9,000, made $11,000, what is your percentage return? Return on investment is, I don't have a calculator, but that's over 100%, isn't it? That's probably closer to about 120? It's actually over 120% per annum return. Who would like to make that 120% return? That's like 10% a month. That's like per week, what's that? 2.5% a week. Who would like to make 2.5% a week return passively for the next 10 years? Anyone? Where the heck can you get any sort of return like that? 2.5% is what a bank will pay you per annum. Seriously, right? Can you see what we've done in terms of structure? It's incredible. It's absolutely incredible. All right? That's at 10%. I pulled out the slides at 12% because you just wouldn't believe me. All right? How do we do this? We use option contracts. Repeat after me. Property options are similar but not the same as share market options. Repeat after me. Property options are similar but not the same as share market options. Some of you have heard about share market options probably through this weekend. They are similar but not the same. In fact, they can do some more things that share market options can't do. But basically, they're a legal right to buy something exclusively. So when you sign the option, you have the exclusive right to buy it or to sell it. It's your choice. All right? And you can on-sell your right without incurring double stamp duty in the Victorian jurisdiction. Okay? So, who could this work for? This could work for a whole range of people. Who's heard the term buy and hold? Who's heard of that term? Think about this. Normally when you buy and hold, you have to come up with a huge amount of capital up front, and you've got to pay huge amounts of cash flow throughout to get to the portfolio. Agreed? But what if there was a way to get the same result, to build a portfolio with not a huge amount of capital up front, but a small amount of capital, and no cash flow throughout, but the same result? Who thinks that would be incredible? Because guess what this is? This is exactly that. It's an opportunity, literally unique, to build a portfolio, get the same result, but do it completely differently. And you know what I worked out? That by the time you get to year 10 or 12, right, you're an LVR of 20 to 25%. If you build a house on it, the overall LVR is about 50 to 60%. That means it's positively cash flowed, you have equity left, and you've built a portfolio of 10, 7, 10, however many properties you want, without any cash flow issues throughout. You build the house when you can afford it, when you can afford to pay the stamp duty, and no more money comes out of your pocket. In fact, money comes in. Who thinks that's extraordinary? Because that's what it is, all right? And that's why we've structured it, not for you guys, for us, and you guys get to benefit if you want to step up to the mark, all right? This is great for a cash flow strategy. Some people want to sell. We've got people who've bought, a father bought himself and 2 sons memberships. They wanted to buy 21 blocks of land because they want to be selling blocks throughout. Why? Because then the profit they'll use, they'll use to come back on their capital, so the return on investment will be even higher. Who understands that? I'll explain it later on to you, all right? This is great. Even if you're a credit impaired, if you have a credit problem, listen to this very closely. This is why I'm so proud of this strategy. As a banker, I know that if a credit impaired person comes into me, I actually can't help them. The credit policy prevents me, right? If you've got a credit problem, I'm sad to say, but you're pretty much stuffed. If you go to any banker, accountant, financial planner, they'll say you're stuffed. This gives you a new chance. It allows you, with very little money, to be able to secure a property. You don't need to go to a bank. You don't need a credit check. Any credit problem will age off in either 5 to 7 years, depending what the problem was. And you are reborn. You are literally reborn from a credit perspective. You then have a good job, you start banking money. By the time you need a loan, which is 10 to 12 years away, you present to the bank like a blue chip A-grade client. Most other people say, well, wait till 7 to 10 years when all the things age off, then try saving and trying to get in the market. It's too late. The market has moved too much. Do you understand? This allows you the chance to get in now, to let time fix and heal any wounds, and then take full advantage, right? And I know this will help so many people, this strategy. Parents of children. Who has children? Anyone has children? Children, according to AMP, cost $1 million from when you start to when they leave, which is now mid-30s, I think. All right? They're called kidults, right? $1 million. But some of these children will not be able to afford to buy houses close to you, or you may not be able to afford their education, or you want to do this to specifically get them the heck out of your house, right? To have some capital there to give to them so they can buy a house or get educated. Some people who are getting older are scared about not having enough money to be able to fund their retirement, and more specifically their aged care and medical expenses. Because people are living longer and the costs of living longer are going through the roof. So this is a strategy for some of those people. But this is also, and last one's probably the most incredible strategy. Who here is within, not the right question to ask, but if you're somewhere within 12 to 15 years of the age of 65, I want you to just think outside the square for a moment. Do you think buying land long-term is a long-term strategy that is compatible with super? Yes or no? Some of you may not know this, but super laws have been changed. I'm not here to give you information. I'm not here to give you advice on super, but I'll give you some general information. Some of the super laws have been changed to allow people to buy property. Who knew that? But not just property, but geared property. You can get loans to buy geared property. Who understands that? Right? Which is great. The other thing is, who knows how much the tax rate is when you hit 65 in super? Anyone know what the tax rate is? Starts with a Z, ends in euro. What is it? 0. Now, that's general information. You need to check it for your own situation. I'm not giving you advice. But think about this. If you bought a bunch of these blocks of land, then built houses on them, you've got huge capital gains, you hit 65, you bought them through your super fund, you hit 65, how much tax do you pay? 0. Who likes the sound of that 0 for capital gains tax? This is an incredible strategy that is so compatible with it. Normally, to buy properties in your super fund, you need a heck of a lot of money because properties are $500,000 at the moment. You can't build that size portfolio quickly and easily. This allows you to do that strategy and then to benefit with the 0 tax when you hit 65. All right? Is it incredible? Yes or no? Because it's a system. It's not just property. It's a system around property we've put together. Some people just want to be a millionaire. Great. Buy 6 blocks, sit back, do nothing else, just wait. And you can start doing that from about 30K plus GST. Would you swap 30K to being millionaire? Yes or no? Hopefully you should. Right. So this is the pricing. The blocks of land in this area. Remember, how much is the Goulburn Valley? It's great value. It's equal 10th. It's $100,000 median price. These blocks of land are either 89 or 99, depending on the size. The 300 square meters of the 89, the 450 square meters of the 99. You have to make a commercial decision. Would you pay $10,000 more for 50% more land? That's a commercial decision. I'm not going to try to preempt that, okay? If you are a member of Property Direct members, because we work for Property Direct members, right? Property Direct members get access to this at an extra $10,000 discount per block. So instead of 89 and 99, it's 79 and 89. Who thinks property direct membership's sounding pretty good already? Anyone? Okay. Now, similar areas selling 90 to 125,000. Here is option one. Option one is the smaller 300 square metre blocks. The price is either 79 for members or 89 for non-members. This is how the payment plan starts. Remember, we want to not leave anyone behind. Everyone needs to focus on this to make sure that they could take maximum advantage of this. We structured a deal with the developer on behalf of our members to allow them to get in with literally as little as $1,100 to start off with. $1,100. And then within 7 days, another $4,400. So $5,500 per block in the first 7 days. And then within the next 3 months, 11 grand. So it's only a small amount up front. That adds up to 16.5 in the first 90 days, and then the balance, which is either 62.5 for members or 72.5 for non-members, within the next 10 to 12 years. And that'll come from the bank anyway. Is that a very low entry point to get into the market? Yes or no? All right? Now, the other option for the bigger block, and I want you to look at the 90-day figure. For the 90-day figure, it's the only one that changes. So for the larger blocks, it's 16,500 in 90 days. So it's still 1,100 up front. It's still 4,400 7 days later, but it's 16,500 in 90 days. That adds up to 22,000 within the first 90 days. And then the balance, which is either 67 for members or 77 for non-members, is due at settlement, 10 to 12 years away. So the total outlay for the bigger blocks is either 89 for members or 99 for non-members. Does everybody understand that? Right? And you could do that in cash. We've had some people, listen to this, they start with cash for the first amounts and then over the next 3 months set up a self-managed super fund, refund the initial money to themselves and pay the balance out of super. All right? We can put you in touch with all the right people to set up in super. That's easy. All right? Some people pay the whole lot in cash up front, get the tax deduction, and then when it comes to the time, they'll actually then put it into their super fund. It's your call. It's an option. You have full decision as whether you sell it, whether you put it in your name, whether you put it in a family trust, whether you put it in super, whatever you want to do, or a kid's name, it's your choice. So we have 3 levels of membership, right? Our 3 levels of membership, all 3 levels get exactly the same education and mentoring from myself and Conrad and the whole team of wealth coaches, right? It's about how much of a plan do you want? Do you want a 3-year, a 5-year, or a 7-year plan? If you don't have a plan, you need a plan. You know you need a plan to get from A to B the fastest, easiest way. This is what we help you. We use property as the vehicle. Why? Because we believe everyone needs to live somewhere. We know that people need houses, and houses are built on land. Does that make sense? But what we do is we do land an incredible way under our system, right? Every level has the same access to property sourcing, right? Same level to property sourcing. Whether you buy 1 or 100 houses, townhouses or apartments, doesn't matter. As much as the banks will lend you, you and your family members can use that property sourcing pillar as much as you want. Where they differ is this: how many blocks of land you can buy as a maximum, right? Whether it's for 3 years, maximum 3 blocks is 3,300 to be a member at that level. At Silver, it's 5 years, 5,500. You can buy a maximum of 5 blocks, either in this development or throughout the period of time. Gold, 7,000 set for 7 years, 7,700, maximum of 7 blocks. Who thinks, even if they just bought 1 block, it pays for your membership? Can you see that? Who thinks the membership is incredibly good value for that period of time? All right? Come on, show me. Put your hands up if you believe it's great value. For those of you who didn't put your hands up, would you have me on your team for less than $1? Would you employ me for less than $1? Yes or no? Our membership works out to be $1,100 a year, roughly. For you and your partner, whether it's a beloved or a brother or sister, I don't really care. You choose. If you have got dependent children, bring them along. They get the same access under your membership. But we only communicate with 1 phone and 1 email address, right? You can share the DVDs. You can share coming to live events. We don't care. You can buy as many properties as you want. We don't care. The blocks of land are limited, though. For $1,100 a year, that works out to be $550 a person. Can I go to flip charts, please? $550 a person. That works out to be about $1.50 a day. For many of you who want to invest, for many of you, this will be tax deductible. For many of you, that works out to be about 80 cents a day. If you can do it cheaper, I'll follow your system. If you can get me deals like the one that we can do, I'll follow your system. But if you don't have a system, you're not getting the best results. And is time ticking, yes or no? Right? And everything we show you, I can show you all the due diligence. In fact, what I didn't show you is for this land deal, we have done more due diligence on this than probably any of our projects combined. This is over 1,000 pages of due diligence. Is due diligence important? It's the most important thing. We only look at that first before we do anything else. But when was the last time we did 1,000 pages? And most of that is from the local government themselves. So you can check it, you can double check it. You know that it's real. So ladies and gentlemen, stand up if you believe that you want to make 20K fast cash. Stand up. Who'd like to make 20K fast cash? Stand up if you'd like to make $250,000 long term. Stand up if you want to buy property and not have to make any payments for 10 to 12 years. Stand up if you're interested in properties where we can save you 20, 50, 100 grand on the way in. Who'd like any of those things? Well, what every single one of you need to do is follow me over there. You're going to fill out a form. You're going to fill out your details. If you've seen enough and understand, put your credit cards on there. If not, no problem. Fill out the details. I'm here. I don't normally see people anymore. I just speak. I'm too busy. I speak everywhere. But while I'm here, they've asked me to stay for 2 days because Conrad was supposed to be here. He was sick. They've asked me to be here. So if you want to pick my brain for your situation, to find out where you're at, to find out where you can go, you're going to get an incredible opportunity to spend about an hour with me. It'll be 55 minutes, okay? I'm going to ask you, when you sit down with me, I'm going to give you a financial fact finder. I want you to know whether you're winning and losing and which way you're moving. You will get a copy of this. I expect that you will fill this out before you come. I expect that you'll be on time, that you'll treat this seriously. I expect that if you have questions, you'll actually write them down. Because I want to maximize my time with you. I don't deal with people who are just curious, right? Even if our system is not for you, you need to take advantage of seeing me, seeing someone like me, to maybe give you one new idea that you hadn't thought of before, and you go, oh my God, because that could change your life. So I want every single one of you, follow me over there. You're going to fill out one of these forms. Then you'll see one of our staff. You'll make an appointment. The best appointment slots will go first. Come and grab a form. Fill out the membership. Some of you are already members. You don't need to do that. Grab a form, fill it out, see our team. I'm here only for 2 days. Fill out a form, make an appointment to see me. Do not let this opportunity go to waste. There is no charge. There is no obligation. There is no commitment. I just want to make sure that you're serious. We're going to help you find out a new possibility. If membership is not for you and you fill out a form, I'll just tear up the form. It's no charge, it's no problem. This is a chance for you to find out how you can get blocks of land, make 20K on the way in. This is a chance for you to get land that's going to make you $250,000 long term. See what the possibilities are, grab a form, fill it out, make an appointment. I only have a limited number of appointment slots while I'm here. The rest will have to be done over the phone. It's better if I'm in front of you because I can draw pictures and diagrams. Grab a form, fill it out. As soon as you've filled out the form, make it legible. If you're here in a couple, please put both your names on there. If there's a female in your couple, could she preferably do the writing, please? It just helps. Print legibly, name, email, phone number. See Nikki, make an appointment. She will give you one of my cards. I don't normally give out my cards. You'll have my contact details. She'll give you a financial fact finder. I'll expect that you fill this out. Yes, they're during the day. Treat it like a doctor's appointment or a dentist's appointment. This is something you must do. You must find out for yourself what you can do, how you can move forward, how you can use the land as an incredible capital growth strategy to get you from A to B faster and easier with no cash flow out of your pocket.